The following program is sponsored by the Pension Group.
Are you recently retired or nearing retirement? You could be walking into a perfect storm of events that could have significant financial consequences for your retirement savings. Hi there, I'm Kelly DeMarco, and welcome to Your Money Matters. Skyrocketing inflation, stock market volatility, rising interest rates, and out of control government spending. How will these events impact you and your retirement? Coming up on today's show, we'll talk about the three biggest threats to your retirement savings and some little known strategies that could help protect and grow your nest egg.
Saving for retirement is a great start, but it's what you do with this money that really matters. How will you reduce your taxes, generate income, minimize your risk, maximize your Social Security benefits, and more? Welcome to Your Money Matters with Michael Martinez, president of the Pension Group, right here in Columbus. Michael is a published author with over 25 years of financial planning experience. This is where you can count on straightforward and objective advice about how you can make your money go a lot further in retirement.
Hi there, I'm Kelly DeMarco, and welcome to Your Money Matters. Today, we're talking about a perfect storm of events that could threaten your financial security in retirement. And here to talk about it is Michael Martinez, president of the Pension Group right here in Columbus. He's a published author, a fiduciary advisor, and has 25 years of financial planning experience. Michael, great to see you.
Kelly, it's great seeing you too.
So, we're here to talk about this perfect storm of events that's brewing right now. Let's just walk through that first event.
Kelly, the first big threat for everyone is soaring inflation. Kelly, most people don't realize it, but when inflation rates are at normal levels of just 2 to 3%, your purchasing power can be cut in half in just 20 years. Let me explain it. So, if your retirement expenses are $5,000 a month, and that's what we see with a lot of our clients, in 20 years, you could expect to maintain the same lifestyle for just $10,000 a month. So the takeaway here is even when inflation rates are normal, it becomes a big problem for retirees. I continue to hear it from my parents. They're on a fixed income. But right now, with inflation rates, they're at 3 to 4 times higher than normal. So this becomes a massive problem, especially for retirees, because it could make your purchasing power deteriorate even faster. Now, Kelly, prices have gone through the roof on everything we buy, including groceries. We hear about all the time with gasoline prices and utilities, but it doesn't stop there. Prices are sky high right now when it comes to travel, airline, rental cars, hotel rooms. And what we're seeing in the housing market is unbelievable at all-time highs. Furniture, electronics, appliances, almost everything we buy is increased due to inflation.
I know you really start to feel the pinch, and it seems like inflation is not going away anytime soon, right?
Well, Kelly, it's not. And, we listen to a lot of different economists, and what they're really talking about is they're warning that this inflation could be really far worse than what we know. And here's why. According to an economist and inflation expert, Peter Schiff, if we measured inflation the same way we did back in 1982, the real inflation could be anywhere from 12 to 13%, which would be the highest inflation rate in our country's history. And I remember growing up back in the 80s and my parents, talking about, inflation rates, 17, 18%, mortgage rates at 20%. It's unbelievable what we're seeing now with what inflation's doing to our economy.
And I imagine too, Michael, I know how many retirees you work with, this inflation right now is really going to affect them.
It really is, Kelly, and inflation is incredibly dangerous for retirees because you're living on a fixed income, especially at rates this high. You only have so much money to spend every month, and the higher prices rise, of course, the less money you have for the necessities. Soon you can find yourself being forced to make the unthinkable decisions, like choosing between buying food or buying medicine throughout your retirement years. Now, there's a recent article from Larry Kutloff, and it's titled Protecting Retirees Against Inflation. And I want to share a couple of the key takeaways that are worth mentioning. And of course, I'm paraphrasing, can inflation continue? And it can. Our country is in a terrible financial shape. We're making money by making money, meaning we're really printing it. And if Congress doesn't take swift and significant action today to raise taxes and reduce government spending, higher inflation can stick around for a long, long time. If inflation hovers around 7%, it could spell financial ruin for retirees or anyone who's living on a fixed income in retirement. The article continues to talk about, apart from its impact on real or after-tax pensions and Social Security, inflation is an investment nightmare for all retirees. It's crashing stock and bond markets. It's affecting pensions out there. We're going to see significant reduction to lump sum pensions this year, in large part due to the enormous uncertainty about its future course. For those fleeing to cash, treasuries, or those equivalents, inflation is turning those, quote, safe havens into guaranteed losers. Now we see what's happening with inflation. We feel the bite every time you're having to buy something, a car, going to the grocery store, whatever it might be. But the question remains, what are you going to do about it? What adjustments have you made to your retirement savings and investments? And we often talk with clients and we discuss, are you going to make an adjustment to your portfolio, or maybe take less in retirement? Or for some people, the unthinkable is maybe they have to go back to work. Because if inflation sticks around for a long time, it could cause you to run through your entire life savings and far too soon. And that's why it's important that you get in front of this now. Now, Kelly, the good news is there are some simple strategies that could help you stay ahead of inflation. So don't lose your purchasing power in retirement.
It really sounds like you just have to have a plan, right? A plan in place to make sure that you don't run out of money. I'm sure a lot of your clients, that's one of their biggest fears, right?
Well, it is. And that's one of the things that we really stress about, is having that plan, understanding it's not just an income plan, understanding tax planning strategies, also getting into Social Security. When's the best time to take Social Security or retirement health care, and obviously legacy planning. So it's more than just investments, it's understanding, the overall plan when it comes to your retirement.
Well, I'm sure, Michael, there's a lot of people that don't really consider, how serious the impact of inflation is in retirement, even when it's low. So what do you think, for those viewers who are watching us right now that are near retirement or in retirement, what's a good way to help protect themselves?
Kelly, inflation is a huge problem for anyone who's recently retired or nearing retirement. But it's not the only problem. We have other significant challenges with our economy, the stock market, our national debt, and what that could mean for your taxes and more. So the big question is, how do you grow your nest egg today? Most people don't think of this, but the fastest and safest way you could grow your retirement savings today is by taking steps now to reduce your taxes in retirement, because the savings could be tens of thousands, if not hundreds of thousands of dollars. And that's why I put something together just for our viewers on the show today. We will show you how you could dramatically reduce your taxes in retirement with a free retirement tax savings analysis.
And I know, Michael, you make it really easy for folks. Explain how your process works.
Sure. Once we get some basic information from you, we determine the tax saving strategy that's best suited for your specific situation. Then we sit down and share these strategies with you so you can see exactly how much money you could save. Now, many advisors may charge thousands of dollars for a customized analysis like this, but we're not going to charge you anything.
I love that. I can't wait to hear more for the rest of the program, Michael. Thank you. So learn how you could dramatically reduce your taxes when you retire with a free retirement tax saving analysis from the Pension Group. The Pension Group typically works with families who've saved $1 million to several $1 million for retirement. But for the purposes of this offer today, if you have saved at least $500,000 for retirement, you can schedule your free analysis now by calling 614-324-1215. There's no cost or obligation, but this opportunity is only available if you call today. So here's that number again, 614-324-1215. Well, are you concerned about stock market volatility and the impact it's having on your investments? We'll talk about why it's the bigger threat than what most people realize when we come back.
You're watching Your Money Matters with Michael Martinez of the Pension Group. This is where you can count on straightforward and objective advice on how you can make the most out of every dollar you've saved for retirement.
Welcome back. I'm Kelly DeMarco, and you're watching Your Money Matters. Today, we're talking about a perfect storm of events that could threaten your financial security in retirement. And joining us to talk more about that is Michael Martinez. He's the president of the Pension Group right here in Columbus. Michael is a published author, a fiduciary advisor, and he has 25 years of financial planning experience. Michael, thanks again for being with us today. We're talking about this perfect storm of events that could impact the next wave of retirees. So, what's the second big threat?
The second biggest threat, Kelly, is everyone's concerned about right now is the continued stock market volatility. Everyone's concerned, and why it could be challenging to get a decent return in the stock market for the next several years. With the exception of a short stock market correction like we saw during COVID, during the pandemic, investors enjoyed one of the longest bull markets that I can remember. It's lasted since 2009, about 12 to 13 years. But today is a new day, isn't it? Today we're facing significant headwinds, including soaring inflation, geopolitical turmoil, rising interest rates, and really what the Fed's doing as far as tightened monetary policy, it's having tremendous impact on the volatility when it comes to this stock market. Now, even the biggest Wall Street cheerleaders out there are saying, don't expect the same returns that we got the past handful of years. It's going to be a more challenging or a bumpy road ahead, and you're seeing this happen right now.
And I'm sure, Michael, with your clients, all this volatility is starting to make people nervous, especially if you're nearing retirement or in retirement.
Well, it is, Kelly, but the worst thing you can do during a market volatility is really panic sell or make emotional knee-jerk decisions. When you panic sell, you lock in those losses and you can miss out on any potential gains when the market does eventually recover. And, we sit down with a lot of clients, we do a lot of reviews. And when we customize their plan and putting together income plans, a lot of our clients are not concerned. They're not down as much with the stock market because we understand risk. The process that we take people through is extremely important. We're not going to put someone in an ultra aggressive portfolio when they should be moderate conservative. So again, understanding risk is extremely important when looking at overall stock market volatility. And we've been indoctrinated into believing buy low and sell high, and we all know this, but how many people actually do that? So when the market falls, everyone gets nervous out there, and some people might want to go to cash. This is not the time to go to cash. Nobody wants to lose money. I get that, but missing out on these gains when the market recovers is even worse.
Absolutely. And I bet there's people out there who are trying to time the market with all this volatility, which, as you know, is it's difficult for everyday people to time things out just perfectly, isn't it?
Well, you're right, Kelly, but if you have a solid retirement plan, and again, not just investment accounts, but actually having a retirement plan, understanding where money is going to be coming from. You should have some money that's your safe money for the next 3 years. So regardless of what ends up happening in the market, your income is not affected for the next 3 years. You should also have a bucket of money that's going to be income later on down the road, call it your safe money. And then you're going to have another bucket of money that's going to be your growth money. But there's always someone out there trying to really time the market. But it's impossible to do this. You're better off really establishing an investment strategy like we just discussed that doesn't revolve around getting the timing of the market right. There's no way to tell when the stock market will bottom out or reach an all-time high. So the saying goes, it's time in the market, Kelly, not timing the market. But by sticking to your long-term investment strategy, a few market fluctuations should be easy to navigate.
With all of these stories that we see on the news every single day, Michael, should retirees start to feel worried about market volatility?
Well, certainly, a lot of people are looking at their statements day in, day out, and they're seeing that the accounts are going down. But if you are positioned properly based off your risk tolerance, you shouldn't see that much of a loss. We've done a lot of reviews with clients, and a lot of clients are happy with the way we've structured things. But if you retire, really during a strong economy and a bull market like we talked about earlier, the wind is really at your back. You're really on easy street, and this could help your money last a lot longer in retirement. But according to CNBC, there was a great article. If you retire during a downturn in the stock market or a bear market, the combination of losses to your investments and the need to make withdrawals to pay for your everyday retirement needs could leave you with 2/3 less money for the rest of your life. This is what we call sequence of returns risk, and why you can't ignore the impact or take it lightly. And this is one of the reasons why we stress about having a plan, not just have investment accounts, but having a plan that is going to give you income in the first 3 years. Maybe for years 4 through 7, give you more income, and then having growth so you're not affected by what's happening today in the stock market.
Yeah, and I want to talk a little bit more about this sequence of returns risk. Is there any way you can protect yourself against that?
Well, certainly, for that growth money, consistently updating and rebalancing your portfolio is the best defense against stock market swings. You should update and rebalance your investments every 6 to maybe 12 months. Or if there's any significant shifts in the market like we're seeing today, as your investments either grow or shrink, your asset allocation will become skewed, which can really cause a portfolio to be sometimes too aggressive or maybe too conservative.
I liked what you talked about earlier, Michael, and that's risk and how you help people navigate risk, because at this point in their lives, there's no time to recover, is there? If they've got a major, something major happens to the stock market and they lose a lot of money, there's not a lot of time.
Well, and that's
to
the thing
recover.
is we don't want to have everyone have all their eggs in one basket. We want to be diversified in different areas and utilize the tools that we have that, if we're going to have income that's going to be there for the next 3 years, it's not going to be subject to all this market volatility.
So all of this market volatility, Michael, could have a huge impact on retirement savings. What's the best counsel you can give our viewers today?
Well, Kelly, there could be some strong headwinds coming for investors, and this could last for some time. So trying to grow your nest egg in this environment comes with even more risk, and that's one of the reasons why you want to work with a fiduciary advisor. Most people don't typically think of this, but the fastest and safest way you could grow your nest egg right now is by reducing your taxes in retirement. Why? Because the less money you pay the IRS, the more money you have to spend in retirement, right? That's why I put together, just for the viewers on the show today, learn how you could dramatically reduce your taxes in retirement with our free customized retirement tax savings analysis.
Talk a little bit more about how you get your clients through this process.
Well, we really gather some basic information from them. We determine the tax saving strategy that are best suited for their specific situation. And then we'll really sit down and share these strategies with them so you can see exactly how much you could save. Now, many advisors charge a few $1,000s or more for a customized analysis like this, but we're not going to charge you anything, and there are no strings attached.
Thanks, Michael. So learn how you could reduce your taxes in retirement with a retirement tax saving analysis from the Pension Group. There is no cost or obligation, but this offer is only available if you call today. The Pension Group typically works with families who've saved $1 million to several $1 million, but for the purposes of this offer, if you've saved at least $500,000 for retirement, you can schedule your free analysis now by calling 614-324-1215. Here's that number again, 614-324-1215. Coming up next, could out-of-control government spending mean higher taxes are just around the corner? We'll have the answer for you when we come back.
Taxes, inflation, stock market risk, Social Security. We tackle the toughest challenges facing anyone that's in or nearing retirement today. Welcome back to Your Money Matters with Michael Martinez of the Pension Group.
Welcome back. I'm Kelly DeMarco, and you're watching Your Money Matters. Today, we're talking about a perfect storm of events that could threaten your financial security in retirement. And joining us is Michael Martinez. He is the president of the Pension Group right here in Columbus. Michael is a published author, a fiduciary advisor, and he has 25 years of financial planning experience. Michael, thanks again for being with us today. So, we're talking about this perfect storm of events facing anyone that's in or nearing retirement. What's the third threat?
Well, Kelly, the third threat is higher taxes. Most people believe they will be paying fewer taxes in retirement. I hear that time and time again from clients. And that makes sense because they're really no longer getting a paycheck. But unfortunately, that won't be the case for most hardworking Americans today. By the time you add up the taxes with your IRA, your 401k, Social Security benefits, and other investment income, you could be paying even more taxes in retirement. And Kelly, to make matters worse, our government has spent trillions and trillions of dollars on economic stimulus, new infrastructure, and social policy bills. Now, our national debt has surpassed a record $30 trillion today. If we went back in 2010, we're at just $10 trillion. Today, we're now over 30 trillion. Wow. But everyone watching right now is smart enough to know money doesn't grow on trees. Someone has to pay for this, and it will be likely you and or me through higher taxes. What's critical to understand is that our government doesn't have money of its own. So the only way to pay this trillions and trillions of dollars in debt is really by raising taxes. If you're retired or nearing retirement, these higher taxes couldn't come at a worse time. This could drive up the taxes you'll pay when you withdraw money from your IRA, 401k, Social Security benefits, investment income, and more. So the money you are counting on for retirement could end up being just a fraction of what you thought it was going to be. And what most people don't realize is that Trump's tax code is going to change in the year 2026. See, right now we're at a 22% tax bracket for those in a 22% bracket. We know that it's going to increase to 26%. So we're going to see a 6% increase across the board, regardless of the bracket that you're in. And one of the things that we're really talking with all our clients about is the increase that's going to happen in taxes in 2026, if not sooner, to cover all this national debt. And not only are we talking to retirees, we're talking even to our youngest clients out there who are embracing these strategies so that we can show them how to get tax-free income in retirement.
I'm sure they appreciate that. This could really impact the taxes on your income, but are there really any areas, Michael, that could spell trouble?
Yeah, certainly, Kelly. You could get hit with higher taxes in a variety of different ways. Well, higher income taxes, we just talked about that the repeal of Trump's tax code in 2026. We know we've been talking about higher capital gains taxes for some time, higher corporate taxes, higher estate taxes, and the list really goes on and on. And here's the kicker, Kelly. The government has the power to change the tax laws however, and really whenever they feel like it. So they can raise your taxes anytime they want. And really, you have no say whatsoever.
I think that most people think that they don't have any control over their taxes, but that's not necessarily true, is it?
No, it's not true. The good news here, Kelly, is you have more control over how much you pay in taxes in retirement than any other time in your life. Really, the majority of Americans are missing out on a huge tax savings opportunity. They just do the same thing year in, year out. They simply prepare and file their taxes on April 15th. But aside from some simple deductions that might help them save a few bucks, what's done is done. And really, you have, tax preparers out there and you have tax planners. And there's a difference in CPAs when you talk about that. But if you want to save a lot of money in taxes, you have to take advantage of tax planning. And with tax planning, you're really looking forward, not backwards, and your savings could be significant. It could add up to tens of thousands, if not hundreds of thousands of dollars in retirement.
And that's why you do a tax saving analysis with your clients, right?
Yeah, and this is one of the things, we actually have tax planning software as a firm that we're really understand someone's tax situation and really advise them on really what the best options are. And oftentimes we'll look at someone's tax return, we'll upload it into our tax planning software. And it's going to give us about a 3 to 4 page report on really what the best strategies you could be considering now, or even if you're in retirement, as far as the best ways to look at the overall tax picture and showing you the best ways to either save money or to get more tax-free income in retirement.
So different. CPAs help us plan our, kind of set up for the past, but planning is something so different. Can you help your clients actually save money in taxes in the future?
Certainly, by taking advantage of these tax strategies, we've had a lot of different clients take advantage of this. People doing conversions of 50, 100, 500,000, even $1 million or more, taking advantage of these strategies today because they understand what's going to happen in the future. We know that taxes are not going to go down anymore. We know tax rates are going to continue to go up when it comes to income taxes. And if we know that there's going to be this change in Trump's tax code, now more than ever, it's crucial that you do the proper tax planning today so that it benefits you later on down the road so that you're not paying more in taxes throughout your retirement years.
What do you think, Michael, as we wrap up the show here, what is the best advice that you could give our viewers about these higher taxes in retirement?
Well, Kelly, that's a great question. And if you have an IRA or a 401k, you want to think of it as your money, and I get that. But, the reality is, it's a joint account. And who's it between? It's between you and really the IRS. Because remember, you still have to pay taxes when you withdraw money in retirement, right? And you could end up paying a lot more in taxes on these accounts than you know. The good news is there are ways you could dramatically reduce your taxes in retirement today. And that's why I put together something just for the viewers on the show today. Now, learn how you could reduce your taxes in retirement with a free, customized retirement tax savings analysis.
Walk us through how you help your customers.
After we get some basic information from you, we determine the tax saving strategies that are best suited for your specific situation. Then we're going to sit down and freely share these strategies with you so you can see exactly how much money you could save in retirement. Now, I'm not talking about some obvious deduction that might help you save a few bucks. These strategies could help you save tens of thousands, if not hundreds of thousands of dollars in retirement. These customized analysis is free and there's no obligation, but we can only offer this to qualified viewers who call us today.
Oh, we really appreciate your expertise. Thanks so much, Michael. And I want to tell you, if you want to learn how you can reduce your taxes in retirement, you can with a free retirement tax saving analysis from the Pension Group. As Michael mentioned, there's no cost or obligation, but this offer is only available for the viewers who call today. The Pension Group typically works with families who've saved $1 million to several $1 million for retirement. But for the purposes of this offer, if you have saved at least $500,000 for retirement, you can schedule your free analysis now by calling this number, 614-324-1215. All you have to do today is call and leave a message. Here again is that number, 614-324-1215. Well, that's all the time we have for today. Thanks so much for watching Your Money Matters with Michael Martinez of the Pension Group. And remember, it's not what you make, it's what you keep. We'll see you next time.
The previous program was sponsored by the Pension Group.